Today marks a historic milestone as the Dow Jones Industrial Average has officially crossed the 50,000 mark for the first time in history. This monumental achievement reflects years of market growth, resilience through volatility, and a significant surge in investor confidence. Looking at the long-term chart, we see a steady climb that accelerated in recent months, culminating in this breakthrough. This 50,000 level is more than just a number. It represents the collective strength of America's largest corporations and the enduring optimism of the global financial markets. It's a moment that will be remembered for generations as a peak of economic achievement for the country. The headlines are screaming as the Dow surges over 1,200 points to close above the elusive 50,000 barrier. This sharp rebound followed a brief period of tech sector jitters, proving that the market's underlying momentum is incredibly strong. CNBC reports this as a decisive recovery, highlighting that the broader industrial sector is leading the charge. Investors who stayed the course during recent dips are now seeing the rewards of their patience. This rally wasn't just a slow drift. It was a powerful statement from the market, signaling that the current economic expansion still has plenty of room to run and grow further. Donald Trump was quick to take to Truth Social to share the news with the nation. In a characteristic post, he announced that the Dow Jones Industrial Average just hit 50,000 for the first time in history, ending with a spirited "Congratulations, America." His supporters view this as a direct validation of his economic policies and America First agenda. The post quickly garnered tens of thousands of likes and retweets, becoming a central point of discussion for those who credit his administration's stance on deregulation and tax cuts for fueling this unprecedented market performance. It is a moment of political triumph. In a follow-up post, Trump pointed out that many experts had doubted this milestone would be reached so soon. He claimed that hitting 50,000 occurred 3 years ahead of schedule, using the moment to contrast his administration's results with those of his political opponents. He warned that a change in leadership would lead to an economic crash, emphasizing that his policies are the only safeguard for the current prosperity. This rhetoric reinforces his campaign message that the stock market's success is inextricably linked to his presence in the White House, making the financial index a key metric for his political narrative. Never one to shy away from bold predictions, Trump is already looking toward the next major milestone. He recently posted a prediction that the Dow would hit 100,000 by the end of his term, attributing the market's strength to his administration's aggressive tariff policies and national security measures. He reminded his followers that he has been right about market movements in the past and urged the Supreme Court to take note. This ambitious target of 100,000 sets a high bar for the economy, suggesting that the current rally is just the beginning of a much larger upward trend in American wealth. While the market celebrates, a shadow of legal and political tension looms over the Federal Reserve. The Wall Street Journal recently broke the news that U.S. prosecutors are investigating Fed Chair Jerome Powell. The criminal probe reportedly looks at his testimony to Congress regarding central bank renovations. This investigation adds a layer of uncertainty to the Fed's leadership at a critical time for the economy. Critics of the Fed see this as a potential turning point, while others worry that legal challenges against the central bank's head could destabilize the very markets that are currently reaching all-time highs and record-breaking milestones. Amidst the investigation into Powell, Trump has signaled a major shift in monetary policy by picking Kevin Warsh to lead the Federal Reserve. The BBC reports that this move is intended to bring a new perspective to the central bank. Warsh, a former member of the Fed's Board of Governors, is seen as someone who might align more closely with Trump's vision for lower interest rates and a more aggressive economic stance. This selection is a clear indication that the administration wants to have more influence over the nation's monetary policy, setting the stage for a potential showdown over independence. The contrast between Jerome Powell and Kevin Warsh is stark, both in their backgrounds and their likely approaches to the Fed's mandate. Powell has emphasized a cautious, data-driven approach to inflation, often clashing with the White House's demands for faster rate cuts. Warsh, on the other hand, is perceived as a more market-oriented leader who might be more willing to experiment with policy to sustain growth. This transition represents more than just a change in personnel. It is a debate about the fundamental role of the central bank in balancing inflation control with the administration's desire for record-breaking growth. However, the road ahead for a Warsh-led Fed may not be as smooth as the administration hopes. Reuters commentary suggests that while Trump wants low long-term yields, Warsh's Fed might not be much help in that regard. The market's reaction to a more political Federal Reserve could actually drive yields higher if investors fear a loss of institutional independence. This creates a complex dynamic where the administration's efforts to lower borrowing costs could backfire if the bond market loses confidence. Navigating these expectations will be the primary challenge for any new leadership at the nation's most powerful financial institution. Trump's economic vision has always been a global one, as evidenced by his appearances at the World Economic Forum. He has consistently argued that a strong American economy is the engine of global prosperity. By pushing for deregulation, lower taxes, and renegotiated trade deals, he believes he is creating an environment where American businesses can thrive and dominate the global stage. His presence at forums like Davos serves to project this strength to world leaders and international investors, reinforcing the idea that the Dow's rise to 50,000 is a testament to the success of his nationalist economic strategy. To understand the current surge, it's helpful to look at the historical data of the Dow Jones returns. The past decade has seen significant fluctuations from the double-digit gains of 2017 and 2019 to the sharp correction in 2022. However, the consistent theme has been recovery and growth. The 2024 and 2025 returns were particularly strong, laying the groundwork for the massive rally we are seeing in 2026. This data shows that while the market experiences setbacks, its long-term trajectory has remained upward, rewarding those who stay invested and maintain a perspective that looks beyond the immediate volatility of the news cycle. As we celebrate this 50,000 milestone, it is vital to remember some core investment principles. First, in the long run, stocks historically go up despite short-term hurdles. Maintaining a long-term mindset is essential for success in the financial markets. You must expect volatility. It is a natural part of the investment journey. Finally, it is wise to avoid excess margin or debt, which can amplify losses during downturns. By following these important notes, investors can better navigate the highs and lows of the market, ensuring they are positioned to benefit from future milestones, whether that's 60,000, 80,000, or beyond.